Hello, traders. It's Wednesday, December 16th, and we're about 2 hours into trading. We are dead till the Fed. The market's really not doing a whole lot of anything. We should get some dovish remarks this afternoon from the Fed. Also, it looks like a stimulus bill might be passed. They're talking about a scaled down version to the tune of about 730 billion. That's got buyers excited. Market is within striking distance of the all-time high, but it doesn't have a catalyst to push us through until that FOMC statement. Even then, I still think that it's going to take that stimulus bill to be signed before we push higher. We've heard this before. I think the market's already priced that in to an extent. So this is a good time for me to maybe go back and take a look at some of the research that I've already provided you. In a crowded world of research, there's a lot of garbage out there. Hopefully, those of you who watch my channel on YouTube, you've learned to trust me. But I'm going to go back and take a look at some of my analysis at the start of the week, see how we did. I don't often have a chance to do that. So I'm going to show you my blog that's online, and it is www.oneoption.com. However, instead of spelling it out, you use the one. And here you're able to read my daily market comments. I also post them to Twitter, so for some of you, it might be easier to follow me on Twitter, and that link is in the description area of the video below. But you can see that my comments today, market's addicted to easy money, and it's going to get a fix. My commentary today was that this is going to be a very quiet day. As we continue to scroll down, you'll see my market comments are extensive with charts, but I want to bring your attention to what I had to say Monday. The headline, don't buy this opening market rally. We will see more selling pressure. This is before the open. These comments were posted. Yesterday, stimulus hopes will attract buyers today. Day trade from the long side. So let's go back and take a look at how those comments did, and then I'm also going to show you comments from my chat room. So if we go back to Monday, you can see this big gap higher. Easily blew through the high of the day, easily blew through two highs of the day. You can see how the market came up, established a high, and then we made a second high, and we had three red candles that followed afterwards. Now, I'd already been telling members that if this low of the day fails, I'm going to be looking to get short. In fact, I was really eyeing up half of this long green candle, and if that failed, then I'd be looking to get short right about where that tail is. And you can see how the market continued to come in. Yes, I was short here. As the price action started to unfold, I could see that we now had a downward sloping trend line here and a downward sloping channel for the overall market. I had mentioned this in my video also that I posted on Monday to YouTube. These channels tend to continue until you have a blow off, a selling climax. But until then, you're going to continue to see these little bounces that take you back up to the top of the channel, and then you test the bottom of the channel. So it's 3 steps down, 2 steps back type of price action. And there's how the day unfolded. That early morning comment before the open was be careful. Do not buy this gap higher. That was excellent advice. You can see how the market continued to float lower, and we got a nice little bounce in here. But as I'd mentioned to members, I said, this is not the selling climax. You can see visually this downward sloping trend line here. It has not been breached. So that was not the type of selling climax that we were looking for. And in fact, I demonstrated exactly what that would look like. It would be a long red candle breaking below this downward sloping trend line, followed by a bullish hammer. On that type of a climax, yes, there would be a buying opportunity. So this little rally in here, I knew was ultimately going to be a short going into the close. Did I trade it? Yes, I did trade it. And there you can see how this was nothing more than a little head fake. And then we got additional selling right in through here. This also, just a little head fake, getting us back up to that downward sloping trend line. So here we go. This is the price action from Tuesday, yesterday. And again, You can verify all of this on YouTube. I think you should verify it. I think that you should go back in every one of my videos, take a look at the picks that I highlighted the day before and see how they fared. Many of you trade them, so I know you post your comments in my YouTube videos. Thank you for doing that. I don't have time to go back and look at all the trades that I posted, but I'll guarantee you the vast majority of them are winners. So we've got the opening gap higher here yesterday. In yesterday's comments, as you recall, I said, hey, stimulus hopes are going to attract buyers today. You're going to want to day trade this from the long side. So, as always, we're careful to make sure that this gap holds. We want to watch for any kind of retracement. And the market started to retrace a little bit in here. And there we go. Now we've got another downward sloping trend line forming here. Well, right about that time, I had posted a comment to my chat room. And you can see a timestamp. And here we are. This is an hour and a half roughly into the open. SPY gap today, smaller than the gap yesterday. That means support is closer, and we should be able to find a bid soon. Until we have a bottoming formation and we can get through the downtrend line, you have to assume we are going lower. Two long green candles closing on their high consecutively would get my attention. A bullish hammer followed by a long green bar would work too. Now this is 10-10, okay? We haven't seen anything like this in the market yet. So as the market continues to come in, lo and behold, we have a bullish candle right here off of the low, followed by a long green candle closing on its high. Also, tails under body right here. I'm going to put up my 10p indicator very quickly. We also had that working in our favor. You could see how the 10p indicator had been bottoming out. We had a bullish cross right in here. Fantastic. We had a little bit of a retracement right in here. This is where I bought the S&P 500. And then the rest is history. We start rally, rally, rally mode. This looks really good in here, and then the market starts to flatten out. So I'm going to scroll down to my comments in the chat room, which, by the way, the beauty of what we do here is I have a systematic approach that I teach. I've got a great tool set in Option Stalker that helps us find the best stocks. My market comments will keep you on the right side of the action. But this is a systematic approach, and it's not just me making money. If you come in and take the trial, you are going to see lots of fantastic traders who have learned the system. All we have to do is post a symbol like this, long plug. Everybody in the chat room puts plug into Option Stalker. We look at the chart and we go, oh yeah, that certainly fits the pattern we're looking for. So in any event, I'm going to continue to scroll down because as I get later in the day, and there's the video that I posted on YouTube, and there's a reminder of what we were looking for earlier in the day. Perfect setup, long in here, goodbye. Really nice day for us. We started to load up on some longs. We did really well there. But I wanted to show you what I was posting later in the day because it's very important. I started to tell everyone exactly the formations that we were going to see. And looking for a closing rally, we want to move back off of the high. And so here's what happened. I'll show you the price action that I was looking for, and we got it. As all of this is happening, I said, here's how I expect this to unfold. We're going to get a little bit of a breakout to the upside, and then those buyers, those breakout buyers, are going to get flushed out. And we're going to pull back, and it's going to look like the market is going to roll over. When it does that, people are going to start shorting. First, they're going to bail out of their longs. Oh no, here we go again. I'm on the wrong side of this trade. So they bail out. And then all of a sudden, the market starts to fall a little bit because you've got some selling off of the high. And they go, I knew it. I should have shorted in the first place. So then they get short. And then the door gets slammed on their face. And we get that closing rally that I was looking for. And so there's your little blow-off rally in there. Now we're starting to see some weakness. Any breakout buyers in here are now going to get flushed out of their positions. And we get a pullback right in here. There we go. There we go. I knew it. Now we're going to roll over. This is exactly when I knew we're going to get that rally higher. I said we need to see that open right there, taken out by 2 consecutive green candles, and then we've got a chance to go. And there we go. Yes, made 7 points on that move right into the closing bell. That's how we do it. And this is not all fabricated. This is happening every single day. I'm calling what the market is going to do. I'm keeping traders on the right side of the action. And then we're using option stalker searches just like I do every day in my videos to find the best stocks. What are the best stocks? Well, there's stocks with momentum. We use ADX to find those. There's stocks with relative strength. We have our indicators for that. I have heavy volume searches so that we can find those stocks. They're delivered to you on a silver platter. So when we start going through these searches, this is what members are doing. They're going through heavy buying, relative strength 30, bull run. These are some of our favorite day trading searches. We're looking at the longer term charts to make sure that the daily chart conforms. If we know that we like the stock on a daily basis, it sets us up really well for some day trades. We just have to make sure that our entry price is excellent on those day trades. And then if by chance we get caught on the wrong side of a trade because the market moves adversely, we can hang on to that position if we need to, knowing that on a swing basis, we also like the stock. That gives us some added protection. Now, I'm not saying that you should always hang on to your losing trades. You shouldn't. You should try and mitigate your losses when possible. Be in, be out, keep your losses small, let your winners run. I mean, that's all common sense. But sometimes we really like a stock and it pulls back during the day. There was some heavy selling pressure, maybe a seller, and you're stuck in that stock, but you're not because you like it on a longer term basis. Those are things that we do in the chat room. And right now, with the market having a tailwind and moving higher and us focusing on the long side, you've got another reason to carry an overnight long or two. So that's how we do it. I posted 2 trades yesterday in my video. So let's take a look at those. Apple was one of them. And here you can see Apple's just kind of chopping around today. But this is where the video came out. And I suggested selling, I believe it was the DEES24 120, 119 bullish put spread for a 20-cent credit. That is in beautiful shape. That's where video came out. That's where the stock is now. It's going our way. PENN was another one that I highlighted in yesterday's video. Video comes out in here. Stock higher. That is a nice bullish put spread also. So please go back, take a look at my videos. When I record the video and you're watching it for the first time, write the symbols down. If you don't trade it, at least look at how it's doing the next day. Look at the reasons in the video that I highlighted that stock and what was it that made me attracted to that particular pick. If you can start outlining these common features and characteristics, you're going to be closer and closer to being able to identify these same stock patterns yourself. In general, if they're coming up on my searches in the platform, they are good to go. They're going to be good selections. So let's take a look and see if we can find anything that we like. I'm going to go to D1. You know that I always like to leave you with at least one trade for today. Now, before I do that, market first, market first, market first. What do we know about the market? The market's near an all-time high. We know that the FOMC statement is coming out, and we know that there's going to be a whole lot of nothing going on between now and the close. We got this nice upward sloping trend line. We got a breakout here. So yes, everything's good. Couple of long red bars in here telling us that there is some profit taking at the high of the day. Put up the 5-minute chart. You can see. We get up to the high of the day. Here we go, gradually drifting off of it. And the market really hasn't moved anywhere since the opening right there. Where the market opened today, that's right where we are right now. So do not do any trades until after the FOMC and after the reaction. There's no reason to do a day trade. But I'm going to see if I can find a swing trade that might look good. So we're going to go through, take a look at the daily charts, click, click, click. This is the process. Shop, really nice breakout here. Like that breakout through horizontal resistance. Very pricey stock. Probably not a great one for most people to trade because the options have a huge bid-ask spread. Put up the major moving averages. Amazon, we can see, is trying to get through that horizontal resistance level. It looks pretty good here. I like the fact that it's above the 50-day and the 100-day, and you can see it trying to get through that horizontal resistance point right in there, selling an out-of-the-money bullish put spread below this horizontal support right here. Hover over that bar, find out the low. It's 3072. So selling below the 3070 strike price on Amazon could make sense. And the notion there would be that that support is going to hold. We want to stay within a 2-week time frame when possible. This is nice. This is a really nice breakout on PayPal. I love this. You can see horizontal resistance, long green candle closing on its high, decent volume today. Let's see if we can grab something right around that 215 level. You can see that that horizontal resistance is higher, probably around $220. Let's see if there's anything in the 215 puts that puts us $15 out of the money. Not likely. Probably have to go out about 3 or 4 weeks, which is farther than I'd like to get some decent premium. So we're going to go out to the D's 31st expiration, see if there's anything in this one for us. Going down to the 215 strike, selling the 215s, buying the 212.50s. I need to get a 50-cent credit for that. And here we've got 23 cents bid offered at 41. We're not there. We need a pullback in the stock. Probably a pullback to maybe 228 would get us filled on that. I like the spread. I love the price action. That would be a nice spread. So we get a little negative reaction to the FOMC. This is one I would consider. D's 31st, PayPal, 215, 212.50 bullish put spread, 50-cent credit. But got to keep looking. I like this AVGO. This is a nice bullish flag formation. There's your pull. There's your pullback right there. There's your bullish flag. We've been in that. Looks good. Not great option liquidity. Going to keep going down. I like this Microsoft breakout right here. That looks pretty good. That looks pretty good. Above the 100-day moving average. But I don't like this for one reason. Choppy, 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 all over the place. So, no, I want something with nice, orderly price action. Good breakout there. I'm still looking. Now, this is what I call nice, orderly price action. Boom, 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 boom. Very beautiful upward sloping trend line. By the way, when you see a trend line like this, where the stock is absolutely conforming to it, the more points that you can draw through a trend line, the more valid it is. And that's because more people see it. So I'm going to click there, and I'm going to click there. There's my upward sloping trend line. Now I've got a GTC alert that's going to be signaled if by chance that's violated. If I were swing trading this, that would be important to me because it'd tell me that, hey, the stock, the character of it may have changed. Be careful. It may also tell me that if I've got a long position in MTCH, I might want to take profits. That's like a trailing stop right there. Easy to set. Let's see if we can find a bullish put spread. We've got the stock at 154.59. Got to come down below that upward sloping trend line down to the 145 strike. D's 31, let's see if we can go out there. I don't know if we're going to get the credit that we need right now. And that's one of the problems when the market starts to quiet down. Option implied volatilities collapse. That means we have to go closer and closer to the money to be able to get the credit that we want. That also means that we're taking on more risk. For some reason, I'm not getting any option chains that are loading here, so I'm not sure why that might be the case, but we'll have to move on. But I do like MTCH. That looks like a nice stock. Beautiful breakout here, GRWG. Yes, I really like this breakout right here. You can see it above the $38 level. Big news on TLRY and AUPH, I think is the symbol, but a couple of big companies in the pot space are merging. The two biggest, in fact, Grow. They make all sorts of hydroponic equipment. So legalization of marijuana nationwide, popular theme. I like GRWG. I think this stock really looks good. I don't know that we're going to get any kind of option premium here. We'd have to go close to the money. 38 is the price level there. We'd have to come down to maybe the $35 strike price where it was right here. This is a classic bullish flag. There's your pole. There's your downward sloping trend line. There's your breakout to the upside. I like it. Take a look at the 35s. Have to go a little bit close to the money on these, but we'll see if the December 31 expiration gives us anything on this. And we go down to the 35, the 35.30. If I could do the 35.30 for $1, and you can see that's in the middle of this spread, I would do that spread. So that expires December 31st. We'd be selling the $35 put, buying the $30 put, doing that for a $1 credit. Our support is right here, that opening price from today, and we would have to close below it in order to be in trouble on this. I feel that the stock has great momentum. It's on its high of the day. It's been able to break through horizontal resistance. As it continues to grind higher, we have more and more cushion. So instead of buying calls on a stock like this, we're actually distancing ourselves from the action. We're increasing our probability of success. We're taking advantage of accelerated time premium decay. That's how you have to trade. Why? Because we don't have a market tailwind. There's nothing to fuel this stock except for the stock itself and some news. We don't have a general market tailwind fueling all stocks higher. It's been 3 steps forward, 2 steps back. Is there going to be stimulus? Isn't there going to be stimulus? Stocks trading at a PE of 40. They're rich. There's no more momentum right now. That's why we have to favor selling out of the money bullish put spreads on strong stocks on the notion that they're going to continue to grind higher. As they do so, we start to naturally build in some cushion in the trade, and time decay is working in our favor every second. Did you see how easy it was for me to go through this list? Click, 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 click. If I went through these, I would find probably 3 or 4 other candidates, but I'm not going to make this into a 1-hour video. I've given you an idea of what I've had to say earlier in the week, what my market analysis is. Market first, market first, market first. Everything starts with the market. If you don't pay attention to the market, that's when you're going to be blindsided. That's when you're going to lose money, because 75% of all stocks follow the market. That's my job. I've got to keep you on the right side of the action. Option Stalker is what puts us into the best stocks, and then you find the right option trading strategy that matches the current market conditions, which right now is selling out of the money bullish put spreads. That's all I've got for you today. Please give this content a thumbs up if you like it. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss one of these videos, because there are a ton of great trading ideas. If I can start to really grow my YouTube channel, I'll get back to posting these videos every day. Thanks again. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.